expected. Let's get more. James Gerrish joins us from Shaw and Partners in Sydney. And James, I'll get a view of overnight from you because, of course, Google not included, or Alphabet not included in the numbers of the final close, given it was after the session's close. But it was still a pretty solid night for Wall Street. Risk sentiment really coming back in.
Yeah, good morning to you, Ingrid. As you made mention of, it was a strong night over in the US market. The Google aftermarket report will obviously aid to the US futures when they open this morning. So that'll, I guess, provide a better undertone or more positive undertone to our market on the open. So look, we're looking for a positive open or positive start to trade today. But you look at what US markets did last night, it was all about yields going higher, financials going higher, some of those yield play stocks going lower. So, it seems like the market's, hung its hat on that growth is still going to chug along. Interest rates are still going higher, even though Trump is doing his best to sort of derail it at the moment.
In terms of how that flows through to our market today, I guess, we are watching sort of different things here. We're watching quarterly still be released, and we're also waiting for reporting season here. Are we taking leads from Wall Street at the moment? I mean, obviously, SPI futures are indicating such.
Yeah, this morning we are. I mean, the trend we've seen in the last couple of weeks actually is the Australian market's been a good leading indicator to what's happening in Wall Street. So you look at, we've tended to run our own race in recent times on the Australian market. Obviously, the financials are such a dominant sector in our market. It's really dependent upon how they trade during our session. So, we had weakness across the financials and the broader market yesterday, and we had nearly a 1% decline on our market. We'll bounce back some of that today, but I don't think we'll recoup all of those losses. So, the banks are starting to tread water a little bit at the moment ahead of the next round of the Royal Commission that is focusing on superannuation coming up at the start of August. But, they've had a good run off their lows. So CBA's up, somewhere like 13-14% from its recent lows. So that's a pretty good run in terms of the short-term movements in CBA. And our reporting season, as you may mention, we've got quarterlies and reporting as well, which will sort of dominate the news flow. So, look, it's an interesting point in the market at the moment. I think, I'm neutral the ASX right here, Ingrid.
Okay, I want to move on to some of the numbers we're getting today, some quarterlies. We've got Kogan updating the market with a quarterly cash flow statement and trading update, talking about revenue growth and also EBITDA growth in FY18. EBITDA growth, they say, greater than 90% of FY17. Revenue growth greater than 40%. They've got a bunch of numbers, including their financial position and customer numbers today. But what do you make of this news out of Kogan? It's had a stellar run, right, over the past year. And, obviously there's a lot of talk about whether it can continue.
Yeah, they have had a stellar run, but that's sort of been thrown on its head in recent times with, a couple of failed sales by Ruslan Kogan and some of the other founders of that company. So, the share price has been under a little bit of pressure. Just on the numbers today, so, I've just read through them pretty quickly. In terms of revenue, the revenue up 40%. That implies 40% increase on 289 that they did last year implies 404 million. The market's sitting at 415 million at the moment. So the market's already predicting a 43% jump in revenue. On the EBITDA line, I think the numbers that they've put out there implies about 24 million. The numbers at the moment in terms of consensus are sitting at 27 million. So look, the statement was a bit of a weird one, to be honest. I'm not sure whether or not it was trying to sort of downplay potential weakness ahead of their results coming out very shortly. But
the wording was strange, wasn't it? The way it was structured. The wording was strange, the way it was structured.
Yeah, it was, and they're using pro forma numbers in terms of the EBITDA line, etc. So, look, I sort of read the statement. I came away with the thinking that it looked more negative in terms of the update for mine. It seemed like preempting the potential for some further weakness when they released their full year numbers very shortly. So I think the stock looks under pressure at the moment, and particularly given that if you're a larger holder wanting to go in there and buy a large line of stock, you know that the founder is looking to sell stock. You know that he's going to be on the sell side again after these results. So you'd probably wait and see how the results go and where he's going to sell further stock.
I mean, and it's hard to know, right? As a founder of a stock selling shares, it doesn't always mean it's a bad story for the company going forward. Sometimes, they just want to cash in some of their chips. But I guess the question here is if him selling out will probably create a dent in the share price, so more value going forward for shareholders, right? But also, is this the only risk for Kogan? I mean, what risks are you looking at for the business? I mean, if the founder is a bit negative on the stock, which we're not saying that that's the case, but what would be some of the risks for Kogan going forward?
Yeah, if you look in the last sort of since listing, he sold shares a number of times. And in the early days when he sold shares, the market or institutions were pretty keen to get hold of the stock, and they bid him well, and there was no issues getting the placements away. The latest placement, he was trying to sell around $100 million worth of stock, and there simply wasn't the bids for that amount of volume there, which that goes to show it's not around the view of Kogan himself. It's more around the demand from the institutional side not to bid into the book of that, take enough stock to cover the book of that size at any discount to market. So, and when they did transact the stock, it was a pretty steep discount to market, and they couldn't get away all of the stock he wanted to. So it's more around the implication, or it shows the demand from the institutions out there is not that high for this stock at the moment. So look, there's a heap of risk going out there. This is a stock built on, or its valuation is built on continued earnings growth. We saw the numbers there, that revenue's up 40%, which is great. EBITDA's up 90%, which is great. But they're on a massive market cap and doing EBITDA of 25 million. So, there's a lot of built-in optimism already in the price in terms of Kogan. So, I don't want to knock a good story because it's been a great story. I just see some short-term headwinds around the actual performance of the business growing into its valuation.
All right, well, let's move on from that one for the moment and go through Iluka, the quarterly number from that one. I mean, it's done pretty well, Iluka. It's trading pretty close to where its yearly highs were, maybe $1 off the yearly highs. I think around $11, with an $11 handle. I think the high is at about $12. What's your take on the numbers out today from Iluka, particularly with those mineral sands?
Yeah, the production metrics were pretty strong in terms of the production they did. The realised price was higher than what the market was anticipating. They've had a high level of free cash flow because they're selling a fair amount of their stockpiles, so they're selling more than they're producing at the moment. So that's helping them to pay down debt. I guess the one negative in terms of the result was a downgrade in production expectations, production guidance. It's about a 2%. Downgrade. They've come out and said they'll do about 690,000 tonnes versus 705 that the market was anticipating, or they are guiding to. So it's about a 2% downgrade in terms of production guidance, but the price realisation has been better. The debt pay down has been pretty good. So they're pretty much, they're almost in a net cash position. They've got reasonably strong stockpiles that they can continue to sell and generate good free cash flow. So look, it looks like an okay result, but that the downgraded guidance may be the only issue for Iluka today.
Okay, watching that one. Speaking of guidance, reporting season coming up. What are you watching? Are you expecting any thematics to come out of reporting season in a week when it kicks off? I mean, anything particularly you'll be watching for? And I guess it's going to be a big driver of whether we can get a next leg up in the market.
Yeah, I think so. So the drivers of our market are obviously the banks and resources, but I think the most activity is going to be outside of that. So, last week we saw CIMIC come out with a pretty good set of numbers. I think that's going to be an interesting area to look at, the infrastructure, mining services type plays. So, they've had some strong tailwinds recently. There's a massive amount of infrastructure work going around in Australia, so CIMIC looks interesting. You look at the hospital operators, so we've had some pretty tough times from Healthscope and Ramsay and across the sector more broadly in recent times. Some information about that. Of course, Healthscope's been under these couple of takeover bids that they've sort of shunned at the moment, so that's going to be interesting to see how those businesses are operating. And again, three of the big four banks are going to report, so they're pretty well covered in research. The market's pretty much across what they're going to deliver. So look, we're not going to get the earnings growth that the US is getting. The US is still getting phenomenal earnings growth, and we're simply not getting that here in Australia. So that's why we're trading at a discount in terms of multiple, and that's probably why we're not doing as well in terms of share price or index growth here.
All right, well, watch this space. James Gerrish, we'll leave it there with you for the moment. Thank you for joining us this morning.
Thanks, Ingrid.
James Gerrish there from Shaw and Partners. For all you business travellers, now let's check on a weather